New data from CoinGlass reveals a significant development in the Bitcoin market. Over $463 million in short Bitcoin positions on major centralized exchanges are at risk of liquidation if the price of Bitcoin rises above $74,341. This level represents a critical threshold that could trigger a short squeeze, where traders who have bet against Bitcoin are forced to cover their positions, potentially accelerating upward price movement. At the same time, a drop below $72,108 could see around $368 million in long positions liquidated, indicating a high-stakes price range where both bulls and bears are heavily exposed. The mechanism behind this is straightforward. When Bitcoin's price crosses a liquidation threshold, leveraged traders who are short Bitcoin will see their positions automatically closed by exchanges to prevent further losses. This forced buying, as traders cover their short positions, can create a feedback loop that pushes the price higher. The same applies in reverse if Bitcoin drops below $72,108 and long positions are liquidated, creating selling pressure. This situation is significant because it highlights a concentration of leveraged positions at specific price levels, when a large amount of trading activity is clustered. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Around a certain price, it often becomes a self-fulfilling prophecy. Traders and algorithms may target these levels, anticipating that others will act once the price reaches them. This behavior is sometimes referred to as liquidity hunting, where traders attempt to exploit the forced liquidations of leveraged positions. For active traders, these levels are not just theoretical numbers, but real points of risk. A short squeeze above $74,341 could rapidly accelerate buying pressure, while a breakdown below $72,108 could trigger a wave of selling. The current setup suggests that Bitcoin is in a zone where either outcome could happen with relatively small price movements. This means that traders need to be cautious about positioning themselves on either side of the market without proper risk management. The stakes are high because the amount of money at risk is substantial. Over $463 million in short positions and $368 million in long positions represent significant leverage. If Bitcoin moves past either of these levels, the resulting market reaction could be sharp and unpredictable. This is why both retail and institutional traders are closely watching these levels. A move above $74,341 could see a rapid shift in market sentiment, while a drop below $72,108 could signal a deeper correction. It's important to note that while these levels are important, they are not guarantees of price movement. Markets are influenced by a wide range of factors, and the presence of liquidation levels does not mean the price will necessarily reach them. However, the concentration of leveraged positions at these levels means that if the price does reach them, the market reaction could be significant. The uncertainty lies in whether Bitcoin will move past either threshold. If it does, most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Resulting liquidation could create a feedback loop that amplifies the move. If it doesn't, the market may remain in a state of consolidation. Either way, the current setup suggests that Bitcoin is in a high liquidity area that could see increased volatility. The next signal to watch is whether Bitcoin can hold above $74,341 or if it breaks below $72,108. A sustained move above the first level could trigger a short squeeze, while a drop below the second could signal a bearish shift. Traders should be prepared for either scenario and consider adjusting their positions accordingly.